Hello, welcome back. This is Seewing Yee, and today I'm going to go over in my opinion, one of the most relevant article was published by Redfin. And the reason why I feel this way is because, this data I'm about to share with you really recap everything what's going on, especially in the past 9 months. And the headline with the Redfin is nearly everyone with a mortgage has an interest rate below 6%, prompting many to stay put. So, just to be honest with you, I've been looking for any kind of a news agency, whether it's Redfin or Autos Research or NAR, any of the popular websites which I've been reporting for the past 2 years to come up with this kind of data. And I'm glad Redfin has come up with a very nice recap of our very informative information, which I feel is very relevant. So without further ado, let's get started. And so it says right here, roughly 4 in 5 homeowners with mortgages have an interest rate below 5%. And nearly 1/4 have a rate below 3%. So with rates now close to 7% right now, as of today of this recording, today is Wednesday, the 14th of June, 2023. This is a very important, urgent information that we all need to take a step back and analyze. So anyway, with rates now close to 7%, many homeowners aren't moving, which is intensifying a shortage of homes for sale. Rates would need to fall quite a bit to motivate homeowners to put their homes on the market. Roughly 1/4 of likely home sellers said they would feel more urgency to sell if the rates were to drop to 5% or lower. According to a recent Redfin survey, the share increases to nearly 80% in rates to were to 3% or lower. All right, I need to really provide my own personal analysis on this. There's no way in heck that the mortgage rate will ever come down to 3%. That is a historical low rate, which was achieved back in 2021. It's just my pure opinion. It'll be pandemonium if this is the case. We will get so much demand. The housing market will be in such a frenzy. Do you remember when the mortgage rate was down to a historical low 3% in 2021? We have seen skyrocketing of home prices. And because at that time, 2 years ago, which is 2021 was a historical year, in many markets, we have seen in 2021, there were bidding wars and multiple offers, like 50 offers per house in many of the hot markets in the US. And the housing prices increased 20, 30, 40% in some markets in just 1 year. So we do not want to go back to that frenzy ever again. So I truly do not believe we could go down to 3%. Maybe in my estimation for this year, for the remainder of this year, is that my personal opinion was again that the mortgage rate by later this year, 2023, the mortgage rate may come down to around 6%. If for anything the mortgage rate come down to below 6%, we're gonna go back to a housing frenzy again, and that is not healthy. Right now, it is a historical low inventory already at around 2.5 months supply of the inventory nationwide in some areas, or even less than that in terms of supply, reaching record low. And right now, even at 7%, think about it, at mortgage rate, we are seeing bidding wars in many markets, like 3, 4, 5 offers per house. And some of these bidding wars resulted in around 5 to 10% of a final list price, of the final sales price above list price. So we have a mini bidding war, multiple offers in many, many markets, especially when those houses are priced correctly, when the houses are nice, fixed up, turnkey, and what have you in good locations. And so think about it. At 7%, we're seeing many bidding wars. Imagine if the mortgage rate goes down to 6%, perhaps this year, this year's over, are we going to see even more of a multiple offers at 6%, maybe 5 to 10 offers, right? Does that make sense? And if it's less than 6%, it is 5.5%. When we get around 15 to 20 offers per house, because the supply of the inventory are not going to increase overnight just like that, unless the mortgage rate or decrease drastically, which I do not see that happening. Okay, so that's just my personal opinion, and the remaining data on this Redfin will pretty much validate what I just said, the most part. And then here it is, the rate has to fall quite a bit down to 5% or lower. I hope that's not going to happen because it's not going to sustain itself. There are too much demand coming from the demand side, and the supply is so low. We cannot, be a unhealthy housing transaction frenzy. I do not personally want that mortgage rate to fall even below 5.5%. Okay, so 6% to me may come back down to a healthy market. So it's just my opinion. Only time will tell. No one can predict the future. So a lot of sellers, let's continue. A lot of sellers. So hopefully you'll agree with me, by the way. Please comment below to let me hear your thoughts, whether my opinions you agree with or not, let me know. So I'll be more than happy to look at your comments and I'll be more than happy to answer back. All right. Anyway, a lot of sellers are also staying put because they bought recently. A record 60% of mortgage holders have lived in their home for 4 years or less, further contributing to the supply shortage. Imagine on more than half of the purchases that occurred in the past couple of years, which just happened past 2 years. So there was so much housing transaction that went on, especially in 2021 and the beginning of 2022 last year. So those homeowners that took action, they have achieved double digit or triple digit, even quadruple digit in appreciation equity growth in that short periods of time. Those people who bought 2 years ago, 3 years ago, 4 years ago, you guys are sitting in a gold mine. You guys, the people who own homes right now, many of you are sitting in a gold mine and you're not going to give up your low mortgage rates unless some condition is going to happen. Yeah. So anyway, let's continue. What else? We need to go on. So this is my body. Almost 92% of U.S. homeowners with mortgages have an interest rate below 6%. Okay. 9 out of 10 mortgage holders have a rate below 6%. As you can see right here, the light green indicates the mortgage holders have a 30-year fixed rate mortgage of 3% or lower. Okay. We're talking 25% of the mortgages, people have less than 3%. For sure, they're not going to sell their home unless the mortgage rate comes down to 4%. And I do not see that happening. So this group, in my opinion, the 25% of the mortgage holders have a 3%. Most likely, they're not going to be motivated to sell because they're sitting pretty. Now, the second layer, the second group, the light blue color, which is 3 to 4%, equals 3 to 4%. The other around this category of percentage of mortgage holders, we're talking the next layer, the 25 to 30% of the mortgage holders are sitting at 3 to 4%. And most of them are not going to get rid of the mortgages until the current mortgage rate will fall maybe 4 to 5%. And again, I do not see that's happening because it'll create a housing frenzy, which will be very unhealthy, which will create another skyrocketing of home prices. So the lowest I believe the mortgage rate is going to fall in the next couple of years was probably maybe 5.5%. Anything lower than that, it will create chaos and it'll be very bad because it'll create tremendous pressure on upward housing prices will continue to increase. All right. And then, of course, the light green of 4 to 5% right here. 50% to 75% of the mortgage holders have mortgage rates between 4 to 5%. Then up here, 10 to 50% of the mortgage holders have mortgage rates around 5 to 6%. And finally, the people with the 6% mortgages, they probably bought within the past 9 months. All right. So does it make sense? This is just an approximate number. So now you know. Anyway, so that means over 92% of homeowners with mortgages have mortgage rates below the current weekly average rate, which is right now is 7% according to Mortgage News Daily. 7% with people with good credit right now, June the 14th, 2023, with good credit at 7%, which is the highest mortgage rate level in over 20 years. Homeowners holding on to their comparatively low mortgage rates is the main reason for today's major shortage of new listings. So again, it's economics 101. We still have pent-up demand, believe it or not, and we're entering a historical low supply of inventory of homes right now, around 2.5%. It could go lower, trending later this year because pending sales has decreased 17% year over year, and new listings are slightly decreasing. New listings are decreasing. So these two trends and active listings are very insufficient. We are at 50% level, active listings below the pre-pandemic level. All right. So these trends will continue. If the mortgage rate will continue at around 6.5% to 7% for the rest of this year, I do not foresee the supply of the inventory going to be any greater than 2.4% supply inventory nationwide. Now, once again, economics 101, if demand is greater than supply, which is the case right now, it will put upward pressure on home prices. Now, if a balanced, healthy market requires a supply of inventory around 5 to 6 months. We have 2.4 to 2.5 months supply inventory. So this is clearly a seller's market. Does it make sense? All right. So if you have any comments around what I just said in the past few minutes, please comment below and I'll be more than happy to analyze them for you and answer your questions. So here's a full breakdown of where today's homeowners fall on the mortgage rate spectrum. Oh, by the way, because of this clear-cut economics 101, pent-up demand versus very low supply, clearly there will be no realistic crash. We're just housing prices, according to Redfin, year-to-date 2023, nationwide. I know it's very hard to discuss nationwide because real estate is so local. We have seen home price increases in the first 6 months of this year at around 10%. So whatever housing prices that were decreased toward the second half of last year, 2022, has been slowly but surely, the first 6 months of this year have almost made it all back. So this correction in the second half of 2022, in my opinion, is very mild. There clearly has not been any kind of crash, just a mild correction in terms of home price decreases. Right? Let's get back to this article. Let's finish it up. Now, I want you to, I'm not going to go over everything. I don't want to make this video too long, but as you can see, you want to look at this on yourself. People have mortgage rate below 3%. They are sitting pretty. They are locked in forever. Okay. They're not going to get rid of their homes. Most of them. Okay. So 1/4 of those that have mortgage rate below 3% and the highest share on record. And so anyway, the lock-in effect has pushed inventory down to record lows this spring. New listings of homes for sale and the total number of listings have both dropped to their lowest level on record for this time of the year. So spring housing market is supposed to be very robust on a historical basis, but this past spring 2023 is an anomaly. it is a just not supposed to happen because active listings, pending sales, new listings has been on a downward trend for the entire first and second quarter of this year, 2023. So this is a very interesting occurrence. Therefore, we are seeing home buyer competition in many markets, not just some markets, and now preventing home prices from falling even further amid tepid demand. All right. So we're just saying still a pent-up demand, even though we are very at a very elevated rate, and people still very motivated to buy amid almost no homes for sale in many markets, especially the in a particular market, if anything at entry level home prices, like a medium price of a particular market or below that range, this type of lower entry level homes have the highest rate of competition. Okay, so this is making most people who don't need to move to stay put, which means there are slim pickings for buyers. Okay, and high mortgage rates right now are discouraging both buyers and sellers. The lock-in effect is unlikely to go away in the near future. Mortgage rates probably won't drop below 6% before the end of this year. That's what I just said. And most homeowners will not be motivated to sell unless rates drop further. Some of them or simply don't want to take a 6% plus mortgage rates, and some can't even afford it if they were to sell their home and try to move up to a new home at a higher price at a 7% mortgage rate. Many of the current homeowners, they cannot even qualify. So why bother to put their homes for sale to move up to move as a move up buyer? All right. So it doesn't make sense. All right. So let me see what else. Roughly half of the mortgage holders surveyed would feel more urgent if the rates would drop to 4%. But that's not going to happen this year. That's not going to happen next year. I don't want that to happen. As I told you, it'll create a multiple offer bidding war situation. Remember 2021, when the mortgage rate are at around 3%. Let me give you one specific market in Austin, Texas. In several situations, I remember in some houses, they were like 400 offers per house in Austin market back in 2021 during the market frenzy. This is just one example of many that occur in many of the boomtown markets, such as Boise, Idaho, Las Vegas, and Phoenix, and Austin, or these boomtown, and even California, all these boomtowns have achieved historical skyrocketing home prices because of the 3 to 4% mortgage rate. So if the mortgage rate gonna get back to the 3 to 4% rate, it'll create better affordability, will create more pent up demand, and the supply of inventory or people who have 5 to 6% mortgages, they are made willing to sell their homes if the mortgage rate fall below 6%. That category of people may want to do that. But the category of people that are holding on to 3 to 5% mortgage rates, most likely they're not going to let go of the rate, because unless the mortgage rate fall to that level, which I do not think that's happening. All right. So I think I've mentioned this several times already. I don't want to sound redundant, but that's the way it goes. The typical monthly mortgage payment has increased by $1,000 over the past 3 years as the rates have risen from record lows and home prices have increased. Right now, the median price, according to Redfin, is $380K. And with a current mortgage of 6.7%, right now it's 7%, the current mortgage payment would be higher than $2,600, right? 7% versus 6.7. So the mortgage rate could be like $2,700 average monthly mortgage payment on a median price of a home as of right now, around $2,700 per month, which is another record high. That's up more $300 from a year ago and up more than $1,000 from 3 years ago. This is absolutely mind-boggling. I want to conclude this. You read this screenshot on your own, if you will. I'm not going to go over every sentence, but I want you to read over this as well. This hypothetical situation. This is mind-boggling. So a record share of mortgage holders have lived in their home for 4 years or less, further holding back supply. When people just barely bought their home several years ago, there's no reason for them to move again. They are situated in their neighborhood and their home. They're happy with the 3, 4, 5% mortgage rates. So they're going to stay put. It's a lock-in effect. The only people that have to move, those people, they have a very important reason to move. Maybe it's a job change, or maybe for health reasons, or maybe they want to move to a lower cost area in the U.S. They may be willing to give up their low interest rate mortgage and buy a home, maybe for cash, whatever, to retire in a low cost area in the U.S. I don't know. It requires very motivated reason for anybody to sell. So anyway, that's pretty much I have to say. I'm not going to go over everything else. A lot of people have purchased their home in the past few years. Good for them. They feel very happy. Their wealth and their equity have grown substantially, even a mere 2 or 3 years. Imagine the people bought their home 5, 10, 15 years ago. Do you know, I think 40% of the homeowners, I could be wrong, don't quote me. I believe 40% of the homeowners in the US, their homes are free and clear. No mortgages, no debt. 40%. Do you know that? In addition, 25% of the homeowners with the mortgages have less than 3%. Then another 20% have mortgages around 3 to 4%. Then another 10 to 50% of mortgages around 5 to 6%. And then 10% of mortgage holders have a mortgage rate of 6% because they bought within the past year. So only, again, don't quote me on the numbers. I'm just giving you some high level numbers. The people, they're going to get rid of the mortgages. They are holding mortgages right now 5 to 6%. So if mortgage rates come down to 5 to 6%, this 10 to 50% of the mortgage holders, they may be willing to move up and sell their homes, but only when the mortgage rates fall below 6%, and there's no guarantee that's going to happen this year or even next year. All right? At the end of the day, the lock-in effect is to continue. There are no real estate crash unless some significant economic event that occurs that we may not anticipate. Other than that, we will continue, in my opinion, as we conclude this video, that most people are going to continue to sit tight and they're happy with their purchases, lock-in effect, getting substantial amount of equity, and they are very, very happy. Their wealth have increased massively in the past few years. Congratulations for those of you. And the remaining of you, it's very sad. We are in a 40-year affordability factor. Many people are sidelines due to their continual home rising, prices rising. The median price of almost more than $380K right now, and the mortgage rate is 7%. They'll continue to sideline a lot of buyers. Even though, a good percentage of the buyers still have money, they still are paying cash. I would say around 1/4 to 1/3 of the potential buyers right now, they have the ability to pay all cash. So that means the housing market is very robust. Many people still believe that in real estate, at least especially for long-term buy and hold, there's a lot of demand out there. Even though the mortgage rate is very high, it's elevated, not very high. 7% is not a historical high, because if you go back to 1980s, the mortgage rate was around 18%. So go figure. Anyway, hopefully you receive a lot of good information. I love this article was put out on Redfin. We just recap what's going on in the past few years. The data is very good. I've been hoping some news organization will come up with this kind of data. And finally, Redfin today come up with this very good article, and I'm very happy to report this. Before I leave you, so you will receive a lot of value from this video, please smash the like button and subscribe to my YouTube channel. And also, please quickly visit my website and drop your email into the form to subscribe to my weekly turnkey real estate investor newsletter. Once you join our free network, you'll receive weekly market updates, investment opportunities, real estate education, and what have you. And we help investors to invest out of state. This is our specialty, regardless of where you live in the country. We connect you with experienced real estate agents and experts in the hottest markets throughout the country. You can buy low price cash flow properties as an investor, regardless of where you live. All right, so go ahead and do that. Thank you so much. This is Seewing Yee, and I will see you on the next video. Have a nice day. Bye bye.